Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about RAMBUS INC quarterly report. RAMBUS Inc. offers a diverse range of businesses and services, including semiconductor product manufacturing, DDR memory, interface chips, DDR4 and DDR5, silicon IP solutions for, plus advanced data center applications, plus government applications, plus automotive applications, interface IP solutions for high-speed memory, and chip-to-chip digital controller IP security IP solutions, including plus crypto cores, plus hardware roots of trust, plus high-speed protocol engines, plus chip provisioning technologies portfolio of patents covering, plus memory architecture, plus high-speed serial links, plus security products. These services are marketed and sold through a direct sales force and distributors to various clients, including memory module manufacturers, OEMs, hyperscalers, and chip makers. RAMBUS Inc.'s stock skyrockets. Key drivers behind the surge in the past year. RAMBUS Inc.'s RMBS stock has more than doubled in value, climbing over 83% since June 2024. The company's strong financial results and strategic positioning in high-growth markets have driven this significant growth. Several key factors have contributed to RAMBUS's stock surge. Robust product revenue growth, led by increased demand for its memory interface chips, has been a major driver of the company's success. RAMBUS maintains a strong market leadership position in DDR5 memory interface chips, with over 40% market share and expectations for further gains. The company's alignment with data center and AI market trends has also contributed to its growth, as its product portfolio is well-positioned to meet the increasing demand for advanced memory solutions. Positive analyst sentiment, driven by high demand in the memory market and expectations for continued market share gains, has also supported RAMBUS's stock price. The extension of a comprehensive patent license agreement with Micron Technology Inc. through 2029 has further secured the company's position in the market. Strong financial performance and outlook have also contributed to the surge, with revenue growth exceeding estimates in recent quarters. Overall, RAMBUS's strong fundamentals, strategic positioning, and alignment with high-growth markets have driven its stock price to skyrocket over the past year. The primary drivers of revenue growth or decline can be summarized into three key areas. Firstly, product revenue was a significant contributor to growth, increasing by 47.3% in 2025 compared to 2024, driven by higher sales of memory interface chips and new products. Secondly, contract and other revenue grew by 33.7%, while royalties revenue remained relatively stable. Additionally, customer trends, geographic regions, new product introductions, and technological innovations all played a role in driving revenue growth or decline. These factors often overlap, making it difficult to pinpoint a single cause of revenue fluctuations. Net income and profit margins overview. The company's net income experienced a mixed trend over the past year. For the first 3 months of 2025, it decreased by $288,000 compared to the same period in 2024. However, for the 9-month period ending September 30, 2025, net income increased significantly by $49,006,000. Additionally, the company's net income also saw a year-over-year increase of $117,950 from 2024 to 2025. Profit margins also underwent changes during this period. The gross profit margin decreased to 79.2% in the first 3 months of 2025, but increased to 80.1% for the 9-month period ending September 30, 2025. Similarly, operating income margin saw a decrease to 35.4% in the first quarter of 2025, but rose to 36.7% for the 9-month period. The reasons behind these changes are multifaceted. The increase in net income can be attributed to various factors such as higher sales or reduced expenses. However, it is also noted that the retrospective application of new accounting guidance may have contributed to the change. The company is indeed generating positive operating cash flow, as evident from multiple pages of financial data. The calculation on page 5 clearly shows a surplus of $4,370 in cash and cash equivalents over total current liabilities. Furthermore, various other pages confirm this trend, with net cash provided by operating activities ranging from $88.4 million to $260.2 million for the specified periods. This consistent positive cash flow indicates that the company is financially stable and capable of meeting its obligations. The company's debt level and interest expenses have shown a mixed trend over the past year. While total debt decreased from $222,444 in 2024 to $117,874 in 2025, indicating a significant reduction of approximately $104,570. Other statements suggest that the change may not be as substantial. Notably, interest expenses have remained relatively flat, decreasing by only 0.6% from $1,064 in 2024 to $1,053 in 2025. Overall, while there are conflicting views on the extent of the debt reduction, it is clear that both debt levels and interest expenses have undergone some change, albeit not drastically so. The financial performance of various segments and regions has shown mixed results. On the positive side, Customer A saw a significant increase in revenue share, rising from 21% in 2024 to 25% in 2025. Similarly, South Korea and Singapore experienced substantial growth, with revenues increasing by $35.6 million and $16.5 million respectively. In contrast, Customer B suffered a decline in revenue share, dropping from 21% in 2024 to 17% in 2025. The United States also performed poorly, with its revenue decreasing by $19.8 million between the 2 years. Management's outlook on company strategy. The company's business strategy is driven by headcount growth, investments in sales and marketing activities, and patented innovations that provide customers with improved performance and cost-effectiveness. However, management faces challenges such as reduced market share, customer budget constraints, competition from other semiconductor companies, and alternative technologies emerging. To mitigate these risks, the company evaluates businesses and technologies for potential acquisitions or divestitures, invests in highly rated and liquid instruments to manage financial market risks, and focuses on adapting to changing market conditions and technological innovations. Despite these challenges, management does not anticipate any liquidity constraints and believes the company has the ability to recover from unrealized losses. The company's revenue growth is dependent on various factors such as obtaining orders from customers, developing new products, maintaining adequate supply, and mitigating supply chain disruptions. Management acknowledges that future revenue is difficult to predict due to uncertainty in customer demand and lengthy license negotiation cycles. Concerns about inventory buildup and supply chain disruption exist. The financial summary highlights a pressing issue in the industry. Multiple sources confirm that there are concerns regarding inventory buildup and supply chain disruption. Pages 4, 50, 51, and 52 all explicitly state yes to this concern, indicating a widespread problem. This suggests that companies may be struggling with managing their stock levels and maintaining efficient supply chains, potentially leading to financial losses and operational difficulties. That concludes the financial summary for RAMBUS INC. Feel free to comment below, and I will be happy to answer them when possible.